Welcome back to Yahoo Finance Live on this Friday morning. I'm Brian Sozzi alongside Julie Hyman and Brad Smith. After this volatile week in the markets, traders are likely counting down the minutes to Friday happy hour. Right now, markets across the board are in the green, though traders are still digesting a rather hawkish new interview by Fed Chief Jerome Powell, so any upbeat sentiment may be short-lived. But Julie, it looks like we're getting some breaking news here on the consumer sentiment front.
Yes, and it's bad. Sorry to interrupt. It's not good. Sentiment falling to 59.1, the preliminary read from the University of Michigan. 64 was the estimate, and 65.2 was the reading from the prior month. So we're talking about a decline of 9.4% from April to May. And I'm looking at the commentary from the Survey of Consumers Director, Joan Shu, in the University of Michigan's release. She says the declines were broad-based for current economic conditions as well as consumer expectations. And she says visible across income, age, education, geography, and political affiliation. So really interesting assessment of current financial situation relative to a year ago at its lowest reading since 2013. 36% of consumers, frankly, I'm surprised it's not higher, 36% of consumers attributing their negative assessment to
inflation.
Yep,
I'm on the page, Julie.
And
they're calling out their consumers are expecting inflation for the year ahead of 5.4%, which is still high. Now, I'll toss the bulls a bone out there, those market bulls. In this report, it is noted that inflation expectations remain well anchored longer term, with the median of folks expecting a 3% increase, which is interesting to see.
Over the longer term.
Over the longer term.
Over the next 5 to 10 years.
Substantial variation in price changes across the types of goods and services, household spending patterns as well. We talk about how much households are changing up what they are spending money on, especially as we had seen in previous sentiment readings as well, the impacts that gas have had on the types of spending that people are doing, especially in the discretionary funds in households, too. We had seen that in the April reading. That was called out. A sharp drop in gas price expectations even had actually led to the bump higher in sentiment in April. But then continually here, that is going to be in the minds of not just investors who are reading into this report to really extrapolate where the consumers are going to continue to impact some of the companies that they're perhaps placing valuations on and their growth expectations, but increasingly for consumers themselves going into this summer travel season who are going to see higher ticket prices for fares, for gas. All of these things are going to have a broader impact economically on the continued path of the recovery, and whatever headwinds are also priced into that too.
And just a quick reminder, gasoline futures at a fresh high this morning. So
up 2.5%.
I just want my eggs to come down. I'm going to stay on until they come. Maybe I'll talk them down. Who knows?